Well, about 3 months since President Trump announced sweeping tariffs on U.S. trade partners, inflation remains muted, the job market remains strong, and forecasters have dialed back their recession predictions. The question now is, will that last? And joining us now to talk about it is financial expert Chuck Zodda from the Armstrong Advisory Group. And Chuck, as always, thanks so much for being with us. Let's start with this. Data from the Labor Department on Tuesday showed that overall inflation remained tame in the month of June. Why have inflation numbers not changed the way some economists thought it might?
Well, I think big things here is the biggest one is just that it takes some time for this to seep into the system. In chatting with people in different businesses, the time that they spend waiting from the moment that they make a decision to order a product from overseas to when it's finally on store shelves can be anywhere from 90 to 150 days. And so in a lot of cases, the start of that period, the start of that 90-day window was really hitting in June. And so the sense that I have is that this was really the beginning of some of those tariff-related price increases starting to seep through into the system. And we're going to see how things progress over the next few months, where I do anticipate that they start to show up with a little bit more force. But the basic answer is just that it takes time. And a lot of companies had pre-ordered a bunch of extra inventory in anticipation of tariffs. And so they're still working through some of that pre-tariff inventory that they had brought in prior to April as well.
And while overall inflation remained tame, prices were up sharply in some sectors. What areas of consumer spending have you seen things be affected the most by the tariff so far?
Yeah, and this is definitely something where you're starting to see these prices moving up in a way that reflects the tariff-related increases. So linens, just as an example, not too many have made it here in the U.S. They were up 5.5% in the month of June. Cookware, also something where you have a lot of it made overseas, up 3.7% for prices in June. Audio equipment, appliances, sporting equipment, toys, all of those running anywhere from about 1.5 up to 2.9% for price gains in the month of June. And so these are a lot of things that are made overseas. They're hard goods. And that's why you're starting to see those prices increasing. The question that I think is going to be really interesting, let's look at cookware as an example. So those prices have gone up. Do we start to see this reflecting in services in the future as well, simply because, hey, restaurants, especially new ones, have to buy new cookware. They might be buying new appliances. Does that mean that when they open their doors, they have to offer their dishes at higher prices than they otherwise would have? These are the things that we want to see over the next few months to see how it evolves.
Now, as it's related to the job market, Chuck, job growth was still solid in June, and the unemployment rate also barely budged. That being said, are there any signs beneath the surface that you've noticed that could indicate that the job market is losing momentum, or do you expect these trends to continue?
Yeah, there are some things that are a little bit concerning out there, but nothing that is, a bright red light at the moment. I think the biggest things that I point to, continuing claims for unemployment are now running about anywhere from, 5 to 7% above where they were in 2024. If you start to see that number creep up towards, 10 to 12% of an increase on an annual basis, that's where things start to get a little bit dodgy historically. So we're not there yet, but it's something to watch. The other thing that we are seeing is a slowing pace of job growth overall, but this is being mitigated right now by two factors. The first, demographics. We do have a whole lot of baby boomers that are retiring right now. And so even if job growth is slowing, you don't necessarily need to see the same level of job growth in order to keep unemployment stable. The other thing on that side of the equation is immigration on a net basis down as well. And so that again means that you don't need as many jobs added in order to keep unemployment stable. The counterpoint is that, hey, if population growth and working age population growth is slowing, then you also have the potential for less growth unless you see big productivity gains. So I think that when we look at this right now, the story is consistent with one where there are some things that are a little bit concerning in the labor force, but right now it's more a case where you probably just have a slower overall pace of growth, and that's something that I think is consistent with a lot of the data that we've seen.
What recession warning signs could return if President Trump imposes the steep tariffs that he did threaten some foreign leaders with?
Well, I certainly think that you start to get all kinds of questions again about what it does to pricing and demand for these different goods. The other thing that we really haven't dealt with very much this year is the potential for retaliation from other trading partners. By and large, we haven't seen significant retaliatory measures. And if you start to see some of those being imposed, that's something that potentially puts a little bit of a damper on the U.S. economy as well. So I think this is all something that continues to evolve. We don't really get much downtime in terms of being able to see, tariff rates and trade policy very consistent for very long. And we'll just have to see how things evolve in the coming weeks, because we're about 2 weeks away from that August 1st deadline now. And that's a time where we could potentially see more tariff rates moving up. The counter to that is that, look, the trend over the last 6 months has been announce high rates and then walk them down as you get closer. Maybe that's what we see here as well. So I think there's some uncertainty that still has to be resolved as we get towards August.
Well, however it plays out, we'll obviously be checking in with you. And thank you so much for updating us on all this. Chuck Zodda from the Armstrong Advisory Group. Appreciate the time as always.
All right. Have a great day.